Hello, thank you again for tuning in for another video. Recently, I was asked by several people to explain the different ways of paying off a mortgage faster. So, which is why I decided to do a video so that I could just get everybody to come to this link. So there's a couple of ways of paying off a mortgage faster that is applicable to everybody, regardless of what lender you're with. Okay, so now before we get into that, I want to talk about what the benefits are of being able to do that. Okay, so the three right off the bat that I can think of in terms of wanting why you would want to pay off your mortgage faster. One is that you can become mortgage free a lot faster, okay, by taking these three steps that I'm going to show you. There are way more than three, but the three that we're going to talk about today could be done by anybody at any point. Okay. The second reason is that you can save a significant amount of money on interest. Okay, so what I mean by that is, let's say you have a mortgage of 500,000. So let's say you have a mortgage of $500,000. Okay, at the end of your 25-year amortization period, this $500,000 mortgage would actually be closer to $791,000. What that means is your $500,000, you've paid that back to the bank, plus you've actually also paid $291,000 in interest. Okay, so the sooner you can pay this $500,000 off, the less this amount would be. And that amount of money is money that you make from your day job. Okay, so any money that you save here would be right back into your own pocket. Okay, the third reason that I think would be beneficial on paying off your mortgage faster is that you can then start to leverage your primary residence to do other investments, whether it's to buy investment properties or to buy stocks or whatever type of investments you want. Okay, so that's the third benefit. So let's talk about the three different ways that are available to everybody who has a mortgage to pay off their mortgage faster. So regardless of what lender you're with, okay, these three are available to everybody, and not everybody is aware of them, even though that it's written in your mortgage documents, but not a lot of people are aware of them. Okay, so the three ways are, number one, so I'll go through it at a very high level, and then I'll break it down into the components. Okay, so the first one is what's called the annual lump sum. Okay, and this is an annual one-time payment, and this is available to you every year. The second one is what is called a double up payment. Okay, and then the third one is just called your payment increase. Okay, and this can be done annually. Okay, so let's talk a bit about the first one. So the first one, depending on the lender that you're with, you can do anywhere from 10 to 15 to 20% per year. So what that means is, let's say your mortgage amount is $500,000 at the beginning of the year. Okay, you can do a one-time lump sum payment of 10%. Okay, if that's what your lender offers. So that 10% would be $50,000. You could actually do a one-time payment of $50,000 right towards the principal. And that would, and you could do that year after year at 10%. If your lender allows you to do 20%, you could actually do $100,000 right off the bat, year after year, without any penalties from your lender. Okay, so this of course depends on whether or not you have the money. Now the thing to consider with this one is that if you have a chunk of money just sitting around, it might be better for you to put that money into your RRSP, your RESP, or some other investment thing that you're already doing. Partly because the mortgage rates are so low right now, right? 3 to 4%. So that you have to figure out, okay, are you going to make more money from your RRSP, RESP, and other investments over paying off your mortgage faster? Okay, so at the end of this video, I'll share with you a link that you can download an Excel sheet that you can figure this out on your own, okay, because everybody's situation is slightly different. Okay, so that's the annual lump sum payment. The other thing that I want to say about that is that some lenders, it is a January to December timeframe, and so it resets January 1st, and then it goes for another year. Okay. Now, depending on the lender, you might it might not be January to December. It might be whatever month that you renewed your mortgage on or got your mortgage on. It would start at that month and go to the following year to the month previous. So it might go from, let's say, August to the following year, July. Okay. So just be cognizant of when your annual period starts, because it might not be January to December. The second way that is available to everybody to pay off their mortgage faster is what's called a double up. So what that means is that for every payment that you make to the bank, you can actually do up to 100% full payment. So let's say your mortgage payment is $1,200 per month. So you could actually increase this by 100% and actually pay an extra $1,200 per month. Okay, so what this means is that you can actually go up to 100% increase. Okay, so keep in mind that even if you don't have 100%, you could do 25%, 50%, whatever amount that you have extra every month, you could do that. And you don't even have to do that every month. You could just do that for one payment and skip a couple of months. And then you get some birthday money or some extra cash flow. Then you could do another amount that's up to that 100% for that monthly payment. So just a side note, if you are on a monthly payment cycle, meaning that you only pay your mortgage payments once a month, then you might want to consider doing what's called bi-weekly or weekly, okay? And because just by doing this alone, you would actually cut off about 2 years of your entire mortgage period. Okay, so instead of 25 years, it might be 22 or 23 years. So just by switching it from monthly to bi-weekly or weekly, you would actually be able to save quite a bit. So now just to continue on that side note, if you were to go to what's called accelerated bi-weekly or accelerated weekly, okay, you would actually take off a couple of more years. Okay, so this is going to be on a separate video. Okay, but I will, the Excel sheet that is available at the end of the program, you could also figure out, okay, how much money would you actually be saving and how much time would you actually be saving if you were to switch to one of these options. Okay, so the third way for everybody to reduce their mortgage time frame is what's called a payment increase. I'm not exactly sure what the term is used by every different lender because everybody refers to it slightly different. But what it is that every year you can increase your monthly payment by 10%, 15%, or 20%, depending on the lender. So let's say your monthly payment is $1,200 a month, and your bank allows you to do a 10% increase. Okay, so your $1,200 a month now would actually become 12,320, so something like that. Okay, so now instead of paying $1,200, you would now be paying $1,320 each month. Okay, so this in itself would then allow you to pay off your mortgage a lot faster as well. And you think about it, now you're adding in an extra 100% every month, and you're adding in a lump sum payment as well. Okay, so these are the three ways that people can pay off their mortgage that is not very well known to everybody, but these are available to everyone. Okay, so now keep in mind that if you do have the extra money, it might make sense to put it into another investment opportunity right now just because of the low interest rate. Okay, so that's it. Okay, so these are the three things. So please feel free to send me an email or give me a call if you do need more information about this. Thanks very much.